Hello traders, I welcome you to E-marketTubeFX, and you are with your trader Henry Ampemdakun. Today we are going to look at another important topic in this Forex industry. As we always do at E-marketTubeFX, we do our best to bring you guys educational content that can help you to do effective technical analysis or fundamental analysis so that it can yield you the kind of profit that you are looking for. So today we are going to look at another important topic in the area of ICT, which has to do with liquidity sweep and liquidity run. If you are a newbie in this industry, or if you are a trader with some level of experience but find a challenge with regard to understanding these terminologies in ICT, which has to do with liquidity sweep and that of liquidity run, today I'm going to do my best to help you understand this concept in ICT so that you can also apply this concept as and when you are doing your analysis, then achieve that dream profit that you are looking for. So today, aside helping you guys to understand this concept in ICT, I'm also going to teach you guys how you are going to apply this concept in your analysis so that you can achieve that dream profit that you are looking for. So if you join me on YouTube or any other social media handle, all I want to tell you at this very moment is that you do well and watch this video to the end. And don't just watch. Make sure you have your book with you and pen, so that as and when I point out those important areas, you jot down. Then as you are doing your back testing on the demo, you can also make reference to those ideas that I'll be pointing out. Then the understanding becomes very deep. So that is what I want you to do for me at this very moment. So as we usually do on E-marketTubeFX, we'll do our best to bring Classroom on YouTube. So there is a slide prepared of which I want to share with you. Then as and when the need arises, we'll bounce back to the chart. As you can see, this is gold USD chart. We'll bounce back to the chart. Then the technical ideas that I'll be sharing with you on the slide, I'll help you with this chart to understand those concepts or those ideas that I'll be mentioning on the slide. So without wasting my time, let's quickly bounce to the slides. Then I'll help you guys to deepen your understanding when it comes to the liquidity sweep and that of liquidity run. So these are ICT concepts that you see on your screen at this very moment. So I'm going to do my best, as I earlier mentioned, to help you guys to understand this concept in ICT and how you're going to apply them in your trade. So as you can see your screen, liquidity sweep versus liquidity run. So to begin with the presentation, when we talk about liquidity sweep, what are we talking about? A liquidity sweep occurs when the price briefly moves beyond previous high or lows, typically forming wicks. So we are saying that a liquidity sweep occurs when the price briefly moves beyond previous highs or lows, typically forming wicks. For instance, the price may aim for equal highs, targeting buy-side liquidity, and momentarily surpass these highs but fail to close above them, subsequently reversing. Alternatively, if the price closes above the highs, if the price closes above the highs, it quickly reverses with strong selling momentum. This action aims to trigger stop loss orders and capture market liquidity. Such moves often lead to sharp price shifts and can create fair value gaps in the aftermath. All these that I've read to you, what does it mean? I'm going to do my best to help you understand all that I've read to you at this very moment. Now, look over here. We are saying that liquidity sweep occurs when price move beyond previous highs. So this is where we have the current swing high, when price move beyond previous high or lows. So in this instance, what we see on your screen, we have a bullish run or a bullish move which brought price up here. After price reaching top here, we saw a reversal. So this is the current swing high, an important zone on the market which is of great interest to this market makers. So as price reversed, we've marked that zone with this resistance or bar draw at this zone. So as price reversed, it got to this point of which buyers did their best to push price up, hoping that it can break this resistance and continue the bullish move. But look, let's look at what happened. As price was approaching the resistance, we saw this inverted hammer formed. This inverted hammer with this long wick means a lot to me, Henry, yes, and any price action trader watching me at this very moment, which shows that sellers have come in strong to push price down. So I'm not surprised price came this low. So price movement from this low up to this level, everything started here. So as sellers were pushing price down, this is where we have the support. This is where the bullish move actually started. So price coming low to go beyond where we have the support here. Price coming low from this point up to this low to take out this particular previous swing low that we have here. Price has triggered stop losses that we have down here. The reason is that we have some traders who have placed their stop loss around this zone. It can be a tight one who joined the bullish move that went up, have their stop loss exactly on the support. Others will also have theirs around this zone. Others will also have their stop loss around this zone. So upon joining the bullish move that actually started at this zone up to the top here, they were in profit, thinking that market will continue in the bullish move maybe out to the top here, but it didn't happen. As price got to this zone, price started reversing. This market makers reversed the market or price, and it actually came down, hoping that as it got to the support it will reverse, but it didn't. Price pushed further down to trigger all the stop losses that we have down here. So in an event like this is what we refer to as what? Liquidity sweep. It's a liquidity sweep in the sense that this area is of great interest to market makers. The reason is that many retail traders have their stop loss here. Those who join the bullish move up to the top here have their stop loss around these zones. They've placed their stop loss down here. So in order to fill their large orders, they want to buy the market, but they need money. They need liquidity to fill their large orders for the bullish move. So as price move and go to this zone, these market makers reverse price up to this low side, then push further down to take out all the money placed here. Remember, when you talk about stop loss, it's a liquidity, it's money. So at any given point in time that you place a stop loss of maybe 10 USD, 20 USD, 50 USD, 100 USD, 200 USD at this zone, depending on your account balance that you are trading with. As you've placed that stop loss, the 1,000 USD, the 5,000 USD, 10,000 USD, the 100,000 USD, as you've placed that stop loss around this zone, be it exactly a tight one on the support or around any of these zones, and you've joined the bullish move, market makers are aware that many retail traders have their stop loss around this zone. And they also need money. They need liquidity to fill their large orders. So in order to allow these retail traders to enjoy the profit that they've gotten up to this level, they said, no, let us reverse price. Let's bring price back to where the liquidity is so that we can trigger all those liquidity and use that liquidity to fill our large orders, then buy the market. And that is what you are seeing here. So when we talk about liquidity sweep, that is what happens. Normally, as and when these retail trader, these market makers trigger the stop losses or capture the liquidity at that zone after pushing price to those zones, then quickly they reverse market, and that is exactly what is happening at this very moment. So all those in the bullish move who joined the bullish move, which started from this low up to this high with their stop loss here, of which they were not content, they were not okay with the profit gotten as price got to this level, and still hoping that market will continue buying and go up so that they can amass wealth from the market. As price reverse up to this zone, it has triggered their stop loss and taken them out of the market. So we call this event or this situation or this instance as what? Liquidity sweep. So after this market makers triggered the stop losses here, look at what happened. Then it is not only buyers who have placed stop loss here. There are other traders who have also placed a pending sell order at the zone, thinking that as price is pushing down and it breaks this particular support, market will continue selling. So they've placed a pending sell order at this zone. So we call this zone a sell side liquidity. If you've not watched the video I've made on sell side liquidity and buy side liquidity, as you can see on your screen, you make sure you watch to deepen your understanding when it comes to buy side liquidity and sell side liquidity. So as I earlier mentioned, there are some traders who have placed a pending sell order around this zone, that as price is pushing price from this high up to this low, they were hoping that market or price would break. After price breaking this support, it will continue selling. But look at what happened. Immediately after price breaking the support, market price didn't close below. Look at how price reversed. So all those with the pending sell order around this zone, their orders were what? Executed, hoping that market will continue selling, but it didn't happen. Immediately after their orders executed, look at what happened. Price reversed. So market or price reversing back to the bullish move, their sell order executed and they have been taken out of the market. So market makers have taken out stop losses of those who joined the bullish move and they were not okay with the profit gain. They've taken them out of the market. Then also they've taken traders who were hoping that market will continue to sell after breaking the support, will continue to sell. They've also taken them out of the market. And this is how liquidity sweep occurs on the market. My dear trader watching me at this very moment, if you've joined me on YouTube, Facebook, or any other social media handle, all I want to tell you is that this is E-marketTubeFX. This trading community or this channel is for newbies. This trading community is for newbies. This trading community is for any trader who is struggling to make consistent profits from this industry. I always do my best to bring you guys educational content that will deepen your understanding when it comes to the forex market, so that at any given point in time you are doing your analysis, you do that effectively so that you can get that dream profit that you are looking for. my dear trader watching me. So if you come across liquidity sweep and you find a challenge understanding this particular concept in ICT, that is what I'm explaining to you. That is what I'm explaining to you. So as I earlier mentioned, this area is what we refer to as sell side liquidity. And I've already explained to you that we have other traders who have placed a sell order, a pending sell order, hoping that market will come down after breaking the support. But look at what happened after this market makers pushing price up to the zone where they place their pending sell order. They reverse market in a bullish move. So their pending sell order were executed, but market didn't sell. It went back to the bullish move and they have been taken out of the market. Traders who are not okay with the profit that they've gathered as price reach this particular high and hoping that market will continue to buy. Price reversing back to the support, push down to this zone, they have been taken out of the market and their stop loss triggered. And this market makers have used all this liquidity captured at this zone to fill their large orders to buy the market. So as you can see, now after taking or captured the liquidity at this zone, look at the bullish run happening here. No bearish candle found here. Look at the bullish move up, which is on the focus at this very moment, as you can see on the screen. So this is how these market makers manipulate the market in their favor. So if you're a trader and you think that this industry is an area where you can just place a button for a buy or sell, my bro, you are in danger. You are in danger in the sense that in a situation where you are not careful, you are not lucky, you rather turn a liquidity to the market. If I say you turn a liquidity to the market, that is what I've just explained to you. So for you to be a smart trader, for you to rather sweep liquidity from the market, I will explain to you how you are going to take advantage as and when these market makers are manipulating the market. I will explain everything to you so that you too can trade this strategy effectively and make profit from the market. Remember, you are with E-marketTubeFX and you are with your trader Henry Ampemdaku. So in this situation, as we can see here, in this case, as price has gotten, as we have this swing high here, as price is moving, as price is pushing up here, if price is able to break this particular resistance, if price is able to break this particular resistance and find it closes at the top here, it means that it has also swept the liquidity at this zone. All traders who were in the selling order, who joined the bearish move that came from top here down here and were not okay or failed to close their trade, failed to secure profit gain from this high to this low, and market trigger or close above here, it means that those traders will also be taken out of the market. Price will hit their stop loss and they will also be taken out of the market. So if price closes here and continue the bullish move, it means that traders who have placed a pending buy order, hoping that market after breaking the resistance will do what? Will continue buying, will enjoy profit as market will continue buying at this point. But a situation where price get to this zone after sweeping the liquidity or after breaking this particular resistance that we have here, then reverse in a bearish move back into this particular zone, it means that all those traders who place a pending buy order, hoping that market price will break this particular resistance, then continue the bullish move, their pending buy order executed, but they've also been taken out of the market. So this zone is also referred to as what? Buy side liquidity. This zone is also referred to as what? Buy side liquidity. So if, as I earlier mentioned, if you've not watched that video, make sure, as you can see on your screen, make sure you watch that video prepared for you so that it can deepen your understanding when it comes to buy side liquidity and that of what? Sell side liquidity. Remember, you are with E-marketTubeFX and you are with your trader Henry and Pim Daku. Today we are looking at liquidity sweep and that of liquidity run. So if you join me on YouTube or any other social media handle, you make sure you subscribe, you like and share. Now let's continue with the presentation. So over here, the knowledge of this liquidity sweep is what actually I used in taking this trade, and I'm going to explain everything to you. I'm going to explain what actually influenced the decision of taking this trade. I will explain everything to you, so you get to understand why I said knowledge about this market is more important than the money that you deposit in your account to trade. I will explain everything to you. Now let's continue. Let's look at the key trading opportunity within liquidity sweep strategy. So over here we are going to look at the opportunities that come with this liquidity sweep strategy. It's a strategy of which I'm showing you that I pray that you add it to the strategies that you use to trade in this market. So earlier on I told you that don't just watch this video. You make sure you have your book with you, you have your pen with you, then you jot down the key areas or points that I'll be giving out, so that you can also apply it at your end, then get that dream profit that you are looking for as and when you join this market, when we are trading. So now I said key trading opportunities within the liquidity sweep strategy. What are they? Let's look at these key opportunities. One of them is top hand entry opportunity. So after a liquidity sweep, the market often reverse directional sharply. So after liquidity sweep, the market often reverses direction sharply because liquidity, that is stop losses, has been collected. That is what I explained to you earlier on. So what is opportunity? After market reversing sharply after collecting the liquidity at those zones, be it the liquidity at the buy side or liquidity at the sell side, what is the opportunity? What are you supposed to do as a trader? Enter a trade in the opposite direction of the sweep. Example, buy after a sweep of lows. I take it again. Buy after a sweep of lows. Sell after a sweep of high. What are we talking about here? This point with regard to the opportunity when it comes to this liquidity sweep trading strategy is telling us that we should buy at the sweep of what? At the sweep of low, and sell at the sweep of high. Now, this knowledge, what I just read to you, is what actually influenced my decision of what? Buying the market at the zone. And I'm going to explain to you. Now, when price got to this zone, when bullish move actually started, we're hoping that it will continue, market will continue buying. But when price got to this zone, we saw some bearish move that bought price at this zone. Then, so as price reversed at this zone, it's an important area. It's a swing high of which is marked out. So we have a bar, a horizontal bar drawn here. So as price got to this point, we're hoping that market will continue selling. But look at what happened. As price got to this point, it reversed. Reversing, expecting that market will reverse back to where we have the resistance, of which it happened. So as price, the bullish move actually continued. It got to where we have the resistance here. It got to where we have the resistance, hoping that the bullish move will continue. But look at this candle form. This candle, this bearish candle here, pushed up before it actually closed to become a bearish candle. Buyers push price up. This market makers push price beyond this particular swing high to take out the liquidity that we have at the zone. So over here, there's liquidity sweep here, because this upper wick of this candle went up to sweep this current swing high, to sweep liquidity from this current swing high. So all traders who joined the bearish move that came down, traders who have their stop loss here, and show the market from this particular high to this low, have their stop loss here, hoping that market will continue to sell up to this low. But look at, as price got here, price reversed. So before this bearish candle actually formed, price went up to trigger the stop loss that we have above the resistance here. The stop loss that we have above the resistance triggered. So all those traders who were selling the market at that moment with their stop loss here, price triggered. These market makers triggered their stop loss and they have been taken out of the market. So after these market makers triggered the stop loss we have here, taking these traders who were expecting market to continue selling, taking them out of the market. Immediately after the liquidity sweep, look at what happened. Market came down, then went below, swept the liquidity around this zone, then came this low. So over here, after sweeping liquidity, these market makers also swept liquidity at this zone, and I will explain everything to you. Let me also add that it is not only traders who have their stop loss, traders who are selling the market having their stop loss, that these market makers trigger their orders. We have other traders who are hoping that as price break this particular resistance, market will continue buying. So they have a pending buy order at this zone. As I earlier explained to you, they have a pending buy order at this zone above this resistance. So as price pushed up, it has triggered or it has executed all the pending buy order, but market didn't buy. It didn't buy. Immediately after executing the buy order, it reversed. So those traders too have been taken out. So those selling the market, their stop loss after getting some amount of profit, and they were not okay with the profit accrued from the market, and still continue to remain in the market, they've been taken out. They've been taken out. Then traders with a pending buy order to being taken out of the market. Now, traders who have a stop loss down here enjoy the bullish move that started from this low up to this high, and were not okay with the profit accrued from the market and continue to remain in the market. Price movement that came from this high up to this low, their stop loss also triggered, and they've also been taken out of the market. They've also been taken out. So traders with their stop loss here, they've also been taken out of the market. So you see how the liquidity sweep works. You see how these market makers manipulate the market to fill their large orders. So if you have your stop loss here, to join the bullish move that went up, you have been taken out of the market. Then traders who have placed a pending sell order, hoping that after market breaking this support we have here, market will continue selling. Yes, market sold. So price movement from this high up to this low, they were in profit. So in a situation where they failed, traders who failed, let me put it that way, traders who failed to close trade as it got to this low, hoping that market will continue selling, failed to close their trade. As price got to this low after sweeping the liquidity and got this low, look at what happened. Market reversed. Price reversed. So price reversing in the bullish move, traders who have their stop loss also here been triggered. Traders who place a pending order, a pending sell order of which was executed, of which price came this low, they were in profit and failed to close their trade. They've also been taken out of the market with this bullish move that went up. They've also been taken out. They've also been taken out of the market. So this is how these market makers manipulate the market to capture liquidity on the market, to fill their large orders, to then either buy or sell the market. So this is how it works. So all that I want you to take note is that at any given point in time that there's a liquidity sweep, market reverses. So over here, there was a liquidity sweep. After the sweep, market reversed to this low. Over here, we have some stop losses here. We have some orders here. After price coming low to trigger all those stop losses, market also reversed. Over here, we have stop losses here. we have traders who joined this bearish move that came down and have their stop losses here. So those traders who fail to close their trade in profit and continue to remain in the market, as price reversed in the bullish move, their stop loss also triggered, and they have been taken out of the market. Then we have other traders here. We have other traders here who have also placed a pending buy order. We have other traders who have placed a pending buy order, that after price breaking. So over here we have boss here. There's a break of structure. After price breaking this structure, after price breaking this resistance, market will continue buying. So they've placed a pending buy order. So their buy order executed. So price movement from this low up to this high was profit. They were in profit. So if they were able to close, traders who were able to close their trade as price got to this high were able to secure profit from the market. But traders who were not content or okay with the profit gain as their pending order was executed, their pending buy order was executed and price reached this very high and continued to remain in the market, price movement up to this low took them out of the market. So all that I want you to understand is that at any given point in time that this market makers sweep liquidity, market reverses or price reverses. So over here, after this market makers clear the liquidity at the bar side, we have a bearish confirmation which confirms that market is coming down, and look at it. So on the market or in the forex market, price move for two reasons. I repeat, on the forex market, price move for two reasons. This market makers move price for two reasons. Price move, one, to sweep liquidity. So price moving to sweep liquidity is what I'm explaining to you at this very moment. So after price sweeping liquidity here, it reversed. Price move. So areas, key zones on the market at which price reverses at any given point in time is an important zone which is of great interest to these market makers, because they know traders, especially retail traders, have their stop losses or orders there. So these market makers always do their best to push price to those zones to trigger all those orders or all those stops, so that they can capture the liquidity at that zone. Then they will use that liquidity. So if you hear me say, if you're a newbie and you hear me saying liquidity, if I say liquidity, we are talking about the money in the market. Liquidity has to do with what? Money in the market. So as you place a stop loss of what? 50 USD, a trader who joined the bullish move that went up with a stop loss of what? 50 USD is lying at this zone. A trader who joined the bullish move that went up with a stop loss of what? 1000 USD is residing here. A trader who joined this bullish move that went up with a stop loss of what? 10,000 USD is residing at this zone. A trader who also joined the bullish move that went up with a stop loss of what? 1 million USD is residing at this zone. Another trader who joined this bullish move that went up with a stop loss of what? 1 or 2 million USD or 1 billion USD is also residing at this zone. So market makers, after sweeping liquidity, then reverse price up to this zone. All the stop loss that we have down here has been triggered. In a situation where a trader took profit or take close trade after maybe reaching this zone, it means that profit gained is secured in the account. That trader has closed trade, he or she has secured that profit gain on the market. Another trader also taking profit at this zone also secured profit. A trader who was not content with profit gain and hoping that market will continue buying to the roof, market will continue buying to the roof, then that expectation failed. Then market reversing, a stop loss of maybe 1,000 USD, 500 USD, 300 USD, 1 million USD, 10,000 USD, or maybe 100,000 USD placed here. Price movement reversing back to their entry price, then pushing further down to where they've placed their stop loss, they've also been taken out of the market. So if you hear me talking about liquidity, we are talking about money. And areas where traders have placed their stop loss, that is where the liquidity is, and that is where it's of great interest to these market makers. That is where it's of great interest to these market makers. So it is always advisable that when you enter the market, whatever profit that you get, be okay with it. As you've been able to achieve your target, maybe with your trading plan, your target is to get maybe 100 USD from the market that day. If you've been able to achieve that target, don't continue to remain in the market. It's okay. Target for the day achieved. Close that trade, then you secure that profit. If the target is to get 500 USD in the market, as price move from this low up to this high, you've been able to achieve that 500 USD profit. It is okay, my dear brother. Just close that trade. Just close that trade to secure that profit, because it is not easy to make profit from this forex industry. I'm telling you the truth, because these market makers are smart traders, of which if you are not careful, if you don't know what you are doing, you'll be laughing at the wrong side of your mouth. So always be content with what the market will give you. That is what I want to share with you at this very moment. Always be okay with what the market will give you. In a situation where you become greedy, market will show you pepper. Yes, market will show you pepper. Market will let you know that it is not an area that you should joke with. So that is what I want you guys to take note. Remember, you are with E-marketTubeFX and you are with your trader Henry Ampemdako. Today we are looking at liquidity sweep and that of liquidity run. So if you've joined me on YouTube or Facebook or any other social media handle, all I want to tell you is that you make sure you subscribe, you like and share, so that anytime I make new video, you will be the first person to watch. Now let's continue with the presentation. So as I earlier mentioned, traders who have their stop loss here, price after sweeping liquidity. So if you have knowledge about this liquidity sweep, immediately price swept liquidity here, you will note that, or you have it in mind that market is about to reverse. So after the liquidity sweep, you can close the trade. So price coming down, you're already out. Or better still, as price swept liquidity, you will know that market is about to reverse. So you can join the bearish move. That is what I earlier on read to you. At this zone. Buy at the low. So that is what we have here. You buy at the low, then you sell after the liquidity sweep at the high. So that is what I want you guys to take note of. Remember, you are with E-marketTubeFX and you are with your trader Henry Ampemdako. So that is what you are seeing on your screen. So you say what? You buy at after a sweep of low, then sell after a sweep of what? High. That is what you are seeing here. So after the sweep of high, you sell. You buy after the sweep of what? Low. So this is what actually influenced my decision to buy the market. As you see here, is this. So you can't joke with the knowledge of the market. And now look at it. Look at this bullish run. This is a trade that I took, and it went beyond this swing high. After market makers sweeping liquidity at this low. All those who were in the bullish order or bullish move that went up, and they failed to close their trade and continue to remain in the market, they've been taken out. Those with a pending sell order also, of which price came to this low, they were in profit. But now, as price was pushing up, the profit gain was reducing, and they were if in a situation where they failed to close it, this market maker took them out of the market because this price movement went up, beyond this particular swing high that you see here. It rose above that. So those who failed to close their trade, the pending sell order here, of which was executed, and they were in profit as price came to this low, failed to close their trade as price came to this low, they were taken out. So this is how these market makers manipulate the market to fill their large orders. They are also traders in this forex industry. In this forex industry, we have market participants, which include these big banks. These big banks that we are talking about, they have a higher volume of liquidity that they have been injecting in the market to move price left to right where they want. That is where they move price to. Then also we have hedge funds. Then retail traders also come in. And me, Henry, that you are listening to or watching me at this very moment happens to be a retail trader. You newbie watching me at this very moment, as you get to understand the market and you start trading, you also become what? A retail trader. And you trader watching me at this very moment also happens to be what? A retail trader. So these are the market participants, and these market makers or these big banks that we are talking about, they are also trading for profit. They are also in for money. They are also in for money, and they always manipulate this market to what? To capture liquidity on the market, to fill their large orders. So in a situation where they want to buy the market, they will initiate a selling move. If they want to buy the market, they will initiate a selling move to push price down to trigger what? The stop loss at the low. Like what you see here. A typical example is what you see here. In this case, the actual intention is to buy the market. But look at what happened. After sweeping liquidity here, they push price down to trigger the stop loss that we have there, to trigger or to capture the liquidity we have at this low. After capturing the liquidity at this zone, then they started buying the market, of which price went beyond this swing high that you see here. So you having the knowledge of the market will help you to know when you are supposed to enter the market and when you are supposed to exit the market. Yes. The knowledge of the market will help you, the trader, to know when am I supposed to push a button for a buy. So on the market, we don't just push a button for a buy. There must be a reason why you are pushing a button for a buy. And there must be a reason why you are pushing a button for a sell. That is why you always hear me saying that if you keep gambling, it is not a strategy or a strategy that can help you to get consistent profit from the market. So if you gamble today and you get profit from the market, remember, it is a loan that the market has given you. If you gamble yesterday and you're able to do what? To sweep profit from the market, remember, it's a loan that the market has given you. A day is coming. You are going to pay back with a painful interest. What am I talking about? Market is going to take the profit that you took from the market yesterday, then also take all the principal, the money that you deposited. The money that you deposited, this market is going to take that principal, that deposit, plus the profit that you gain with that gambling strategy that you have been using to trade the market. Is going to take everything from your account, then render you with 0.00 balance. Yes, this market is going to render with 0.00 balance. It is there that you understand what I'm telling you now. So on the market, we face this market with what? A weapon. This weapon has to do with what? Knowledge. You having a better understanding of the market is what you are going to use to face the market. So at E-marketTubeFX, I always encourage you guys to do it the right way. Never allow yourself to be influenced. If you've seen these traders who have been posting huge profit on the social media, don't be influenced. They are not just pushing button for a buy and sell. They went through, they allowed themselves to be taught. They went through the process. They've been through fire. They've gained the knowledge as to how to trade this market, and they are trading in the right way, and they are gaining profit from the market. So if you're also a newbie, you fall in love with this industry, and you also want to trade this market, and you think a trader just push a button for a buy or sell and gain profit for the market, hey, this is not how these professional traders trade. This is not how the professional traders trade. We trade with the knowledge of the market. We trade with understanding. We trade with the system. We trade with the rule. So if I joined this particular trade, it's all because of this. Because of this. All because of what I'm presenting to you at this very moment. So with this knowledge, it can help you to sweep some profit from the market. It can help you, and I pray you get this concept right so that you can also apply it as and when you want to trade. Remember, you are with E-marketTubeFX and you are with your trader Henry and Pimdako. Now let's continue. The next point has to do with what? Fair value gap entries. Sweep often create fair value gaps. Price imbalance where few or no trades occurred. So as and when there is liquidity sweep, it often creates what? Fair value gaps. What is the opportunity? Wait for price to retrace into the fair value gap. Then take entries in the direction of the new move. So as and when there is a liquidity sweep, it creates fair value gaps. Yes, you all agree. So what happens to that fair value gap? What are you supposed to do with it? What you are supposed to do is to what? Wait for price to retrace into the fair value gap, then take entries in the direction of the new move. Now, what are we talking about here? Let's go to the chart, then you have better understanding of what I want to share with you. Remember, you are with E-marketTubeFX and you are with your trader Henry and Pimdako. Now, let's look at something here. This is a 4-hour time frame, and over here there is a liquidity sweep, as you can see, at this zone, and it has created a fair value gap along the line, of which as a trader you can also take advantage of. So to help you understand, let's check something here. I want us to do the analysis from the 4-hour time frame. Then we'll go to the 15-minute also. There's also another opportunity there that I will show you. So this is the liquidity that I'm talking about. After price moving from this high to this low, we have a support here, of which market this bearish move broke this particular support and came this low, of which created a fair value gap. So when we talk about fair value gap often occurs in 3 candles. So in a situation where price, let me zoom for you to see. So let me clear this one. So over here, price was not able to, this lower wick was not able to mitigate the upper wick that we have here to fill the gap that we have here. So in a situation where you have a gap like this in the middle candle, we call it a fair value gap, and it represents imbalance in the market, of which in future price will reverse to fill that gap. Then market will continue in the bullish move. So as price broke this particular support, it has created a fair value gap on the market. So as this bearish move was in focus, if you are a trader and you have knowledge about this liquidity sweep, you can take advantage of this fair value gap strategy. Then you can also make some profit from the market. What am I talking about? Now we have a fair value gap. There's a 4-hour time frame. Let's go to the 2-hour time frame. So with the 2-hour time frame, as price came this low, we still have the fair value gap at this zone. So as price what you take advantage, you enter the market as price what retrace into the fair value gap. So as price retrace into the fair value gap, we're expecting that these buyers will continue what fill this fair value gap, break this particular mid, then continue filling the fair value gap. Then the bull move will continue. But look at what happened. As price got to this fair value gap, under the mid of the fair value gap, a bearish candle formed. If the 2-hour is too much for you, let's place a bar on it. Then you see how powerful this strategy is. Let's come to the 1-hour time frame. So with the 1-hour time frame, this bearish candlestick form here is a confirmation. So as price retraces into the fair value gap, there's a bearish candlestick formed here, which confirms that market is coming down. So you placing your stop loss behind the mid of the fair value gap, then entering the market right after the confirmation of this bearish candlestick formed here. You selling the market from this high up to this low is profit for you. It's profit for you. And remember, we have a liquidity sweep here. Of which brought price this low. And price is now retracing into the fair value gap. And you've also taken advantage of the bearish continuation, of which you've gotten profit from the market. If the 1 hour is too much for you, you can also go to the 30-minute time frame. If you are a scalper, you can take advantage of this. You can go to the 30-minute time frame, pick your confirmation, put your stop loss behind the mid of the fair value gap, then join the selling move. So price from this high up to this low is profit for you. If the 30 minutes is too much for you, you can also use the 15 minutes time frame. So with the 15 minutes time frame, what are we talking about? Let's capture the zone, then you have a better understanding of what I want to share with you. So this is the 50 minutes time frame. So as price retraces into the fair value gap, we have this bearish candlestick confirming the bearish move, which is about to come down. So after placing your stop loss behind this supply zone, then joining the market at this low, price from this high up to this low is all profit for you. Better still, you can go to the 5 minutes time frame, then you can pick your confirmation there. So my dear trader, you can't skip knowledge. You can't skip knowledge and expect consistent profit from this industry. Knowledge is very key. Knowledge about the market is very key. I want us to track where we place the bar so that you see how powerful this strategy is. So this is 5 minutes time frame. So if you're a scalper, you can also take advantage of this liquidity sweep strategy that I'm showing you with regard to the fair value gap that it creates as and when there is a sweep. You joining the market from this point, price movement up to this low is all profit for you. Remember, the fair value gap that we drew in the 4-hour time frame is what you are seeing here. So it's not a small strategy that I'm teaching you. You can backtest at your end, and you let me have the feedback at the comment section. Remember, you are with E-marketTubeFX and you are with your trader Henry and Pemdako. You can also go to the 1 minute time frame, then you also do your backtest there. Then you see how powerful this strategy is. Now let's go back to what I'm sharing with you on the slides. Remember, we are looking at liquidity sweep and that of liquidity run. So we are now on the third point, which has to do with improved risk reward ratio. Since you are entering right after liquidity has been taken, your stop loss can be placed tightly beyond the sweep. So what is the advantage here? What are we talking about? I will not say anything for now. We'll go to the chart so that you have a better understanding of what I just read here. What is the opportunity? This setup offers high risk to reward trades with limited downside. Now, look at something. Look at something here. You joining market after the liquidity sweep, price that came down to sweep liquidity at this zone. Then as price got to this level, we got a confirmation of what the bullish move which is about to happen, because there was a liquidity sweep. These market makers push price down to capture all the liquidity we have at this zone. So now that liquidity is captured, we have a bull confirmation that tells us that market is about to what? To reverse. All you need to do as a trader is to just place your stop loss just after below the support. So mainly you had a confirmation. You can even go to the lower time frame. If you're a scalper, you can go to the lower time frame, because the liquidity sweep occurs in all time frames. It's not only the higher time frame that the liquidity sweep occurs. It occurs in all time frames. So if you are a scalper, you can either go to either 1 minute to 5 minutes. Then you pick your confirmation there. Then you join the trade. If you're a day trader, 30 minutes, 1 hour is okay for you. 30 minutes, 1 hour is okay for you. So this is a 1 hour time frame that we are talking about. So after you get a confirmation, you can place your stop loss below the support. Then you join the bullish move. And price movement from this low up to this high is come with high amount of pips. It comes with high amount of pips. So the risk to reward, a good risk to reward ratio that I just read to you is what I'm presenting to you on the from this image. The trade that I took is what you are seeing here, and this can give you almost 1:6 to 7 risk to reward. This particular trade, if you join at this low, placing your stop loss here, joining market after the confirmation of this candlestick, can give you 6 to 7 risk to reward ratio. So that is what it means. So you having knowledge about the market can help you to enter the market at the effective time, at the appropriate time. You not wait for price to reach the higher zones before you join. When you wait for price to reach or take off, or you join price, or you join the market late, what happens is that your risk to you see that where you have to place your stop loss, if you check the amount involved is too much, of which if price fail to validate your analysis and it heads towards your SL, you are going to lose a lot. But if you're able to do the analysis well, you have better understanding about how this market works. You see that you always enter the market at the right time. The right time is what you are seeing here. After the liquidity sweep, place your stop loss here. Then join the market after the formation of this candlestick. Price movement from this low up to this high is all profit for you. Remember, you are with E-marketTubeFX, and you are with your trader Henry Ampem. So over here, after price sweeping this liquidity, then I also joined the market. After price sweeping the liquidity, I knew market is going to buy. Then I joined the bullish move, and this went beyond the swing high that we have here. So then I took this particular trade just because of the knowledge I have with liquidity sweep. Because at any given point in time, there is a liquidity sweep, market reverse. So you take note. Remember, you are with E-marketTubeFX, and you are with your trader Henry Ampem. If you join me on YouTube, please do not forget to subscribe you like and share. So I've also explained this particular point to you. Now let's look at the fourth point, which has to do with smart money entry point. Institutional traders often use liquidity sweeps to fill large positions. Opportunity. Retail traders can align with smart money flow, entering after institutional manipulation is complete. What am I talking about here? What does this mean? All I want to tell you is that if you're a trader, if you're a retail trader, and you want to make profit from this industry, you can't trade against these market makers. Or in other words, the best thing you have to do is always aligning yourself with the trend. Let the trend become your friend. I repeat, if you are a retail trader and you want to make profit from this industry, always do your best to follow your parents. Yes, if you've not watched the video I make with regard to understanding market structure, I said this in that video that we retail traders, our parents happens to be the market makers or the institutional traders, because they inject high volumes of liquidity in the market, of which move price. And because we retail traders cannot move price, for us to make profit from this market, we have to follow this institutional traders or this market makers. So they happen to be our parents. When they move, we follow them. When they move, after they are done sweeping liquidity at key zones and they are about to reverse to the other side of the market, then we also join the new trend which is about to happen. So that's what it means. So always, if you want to make profit from the market, please always make sure you align yourself with the trend. Let the trend be your friend. Never trade against the trend. I repeat, never as a retail trader trade against the trend. Because in the situation where you try to trade against the trend, if you're not careful, you will laugh at the wrong side of your mouth. Now, what am I talking about here? Let's go to so with this I want us to go to the chart so that you have a better understanding of what I'm talking about. So with this retail traders or the institutional traders, let me put it in a better form, these institutional traders have swept liquidity. They have swept liquidity, and it's a confirmation that market is coming down. Look at this wick. This wick went up, or this market makers push price up to clear the liquidity at the swing high. So after liquidity swept at this swing high or at this zone, we have a confirmation of a bearish candle formed here, which confirmed to us that market is about to go down. So if you're a trader and you've been able to, with the strategy that you use in trading, you've been able to confirm that market is about to go down, why do you trade against the trend? It's a confirmation that market is there. So all you need to do as a trader, you can have, if you're a day trader, you can have your stop loss behind this zone. Then you join the bearish move that is coming down. So you joining the bearish move that is coming down means that you've aligned yourself with the trend. You are not trading against the trend. You've aligned yourself with the trend. If the 4-hour time frame is too much for you as a day trader, let me place this bar here. Then we break this thing down. We do the TDA so that you understand. So over here, this is a 2-hour time frame. As price got to this zone, we have this bearish candlestick formed in the 2-hour time frame, which confirms that market is about to go down. So after the formation of this candle, you can have your stop loss behind, then you join the bearish move coming down as a day trader. If the 2-hour is too much for you, you can come to the 1-hour time frame. So you understand why I said you letting the trend be your friend is the best way to make profit from the market. This is the 1 hour time frame. So after price reaching this zone, you saw the how price this market makers, buyers and sellers were doing their best. Buyers were doing their best to push price up. Then we had a bearish move that came down. Then buyers doing their best to break the resistance that we have here. Then another bearish candlestick form. Then we have another bull candlestick form. Then the 4 hour candlestick that we place the bar on is what we are seeing here. So this candlestick represents the first 1 hour of the 4 hour time frame candle that we place this bar on. So this candlestick gives us what? A first 1 hour pictorial view of what is happening in the 4 hour time frame. Or in other words, this candlestick gives us what? The first 1 hour pictorial view of what is happening in the 2 hour time frame. If you come to the 30 minutes time frame also, let's come to the 30 minutes time frame, then you can see what I'm talking about. Let's go to the 30 minutes time frame, then you see for yourself. So you being in the 30 minutes time frame means that you want to have what? A 30-minute pictorial view of what is happening in the 1 hour time frame. If the 1 hour is too much for you, as this bearish candlestick formed, it's confirmed to you that the new trend is unveiling itself, of which you have to align or join this bearish move which is about to go down. So you joining the bearish move means that you've aligned yourself with the new trend. You've aligned yourself with the trend. You've aligned yourself with this institutional traders' price that they're about to push down. You are not trading against them. You are not trading against them. So that is what it means at that side that I just read to you. So if you want to make profit from this industry, always make sure as a retail trader, you align yourself with the trend. As and when these institutional traders do their manipulation, when they are done, don't become a liquidity to the market. Make sure when they are done with their manipulation, after they are done clearing the liquidity or capturing the liquidity, then you follow the new move which is about to happen on the market. So this is what I want you to take note of. And you can continue the back test at your end. If you have to go to 15 minutes time frame, you see this same bearish move, you see it started over there. So this is what I want you guys to know. So if you are a scalper, you can take advantage of this strategy. If you're a scalper, you can take advantage of this strategy. If you're a day trader, you can also take advantage of this strategy. Remember, you are with E-marketTubeFX and you are with your trader Henry and Pem.com. Today, we are looking at liquidity sweep and liquidity run. So I'm helping you as to how you can apply this ICT concept in your trade and make that dream profit that you are looking for. So that is the liquidity sweep that we are looking at. We are now on the 4th point. Let's look at this particular point, then we are good to go. Scalping or swing opportunities. Scalping or swing opportunities. So what are we talking about here? Scalping or swing opportunities. Liquidity sweeps occur across all time frames, as I earlier mentioned. So you catch, so with the scalpers, you catch quick reversal after sweeps or lower time frames. So earlier on, I explained to you guys that as and when these market makers sweep liquidity, as and when they sweep liquidity and the market is about to reverse, I just demonstrated to you how you can use the different time frame as a scalper to join the market, early. So 1 minute to 5 minutes is a good time frame for you as a scalper. Just pick your confirmation there, like what I just demonstrated to you. So if you have to go back to the the analysis that we're doing. So we ended at 30 minutes. You can come to that of 15 minutes time frame. So the 15-minute time frame, what are you looking at? You want a 15-minute pictorial view of what is happening in the 30 minutes time frame, so that you can pick a quick confirmation, then you join the bearish move. Let's see if really this strategy works. Let's see. So you being in the 15 minutes time frame, that bearish move that started, of which we placed the bar on in the 4-hour time frame, is what we are seeing over here. So this 15 minutes, if you are to do the comparison, this 15 minutes is giving us a first 15 minutes pictorial view of the 4-hour time frame. So for you to wait for the 4-hour time frame candlestick to finish its formation is time wasting. So as a scalper, it's time wasting. For you to sit down and wait for the 4-hour candlestick to finish its formation, or for you to sit down as a scalper, you sit down and wait for the 2-hour candlestick to finish its formation before you take decision. We are wasting time. You can't wait for the 1-hour time frame candlestick to finish its formation before you take it. You are wasting time. Come to 15 minutes. So this is the confirmation. So price movement that came down, all profit for you. If the 15 minutes as a scalper is too much for you, you can also come to 5 minutes time frame. Let's see how it works. Let's see. We've placed the bar on it, so we are tracking. If really market was selling at that time, you yourself will confirm. Remember, you are with E-marketTubeFX and you are with your trader Henry Ampem. Today we are looking at liquidity sweep versus liquidity run. How you can apply this ICT concept in your trade to make that dream profit that you are looking for. So because it's a lower time frame, it's behind, so we want to track it. Yes, it's around here. So that is it. So you being in a 5 minutes time frame, meaning that you want to have the first 5 minute pictorial view of what is happening in the 4-hour time frame. Yes, so this is a pure TDA that I've done with you, of which as a scalper you can take advantage. And if you apply the same thing going to the 1 minute time frame too, you will see the same thing there. So if you're a scalper, you can take advantage of this strategy. If you're a day trader too, you can also take advantage of this strategy. And if you're also a swing trader, you can also take advantage of this strategy. If you're a day trader, a swing trader, you can also take advantage of this. So with a swing trader, the 4-hour time frame is okay for you. You've gotten a confirmation that market is coming down. Price movement from this high up to this low is profit for you. A huge amount of pips, of which is going to earn you a lot of money. So this is how you can apply this liquidity sweep strategy and make profit from this forex industry. Remember, you are with E-marketTubeFX and you are with your trader Henry Ampem. So with the swing traders, I've also explained that particular side to you. So let's move on. So now let's look at that of liquidity run. Then we bring this presentation to an end. Liquidity run. When we talk about liquidity run, what are we talking about? Liquidity run occurs when the price moves in the direction of the prevailing trend, targeting liquidity and continuing its movement. For example, in a bullish market, the price may aim for prevailing high, capture the liquidity there, and then continue rising to reach a new high. Conversely, in a bearish market, the price may target a prevailing low, capture the liquidity, and then continue falling to reach a new low. So what are we talking about here? Now look on the screen. As you can see here, when price was at this low, buyers did their best to push price up, but these market makers push price up, of which broke this particular resistance that we have here. So with this situation or what is happening on the market, liquidity at this zone cleared. So those who were in the selling move, who joined the selling move from this high up to this low, who were not content with profit gain, their stop loss triggered and they have been taken out of the market. So as price went high at this point, traders who were also having their buy pending order also executed, hoping the market will continue buying up to this high, then they can get more profit. Traders who closed their trade after their pending buy order executed, as price got to this zone, they were able to secure their profit. But traders who remain in the market for long, the market, they show them pepper. And that is the evidence is what you are seeing here. After price breaking or sweeping liquidity at this zone, market reversed. And the bearish move is what you are seeing here. And this is a liquidity run. Why is it a liquidity run? Price broke this particular zone, swept liquidity here, but it didn't end there. Please take note, in area of what? Liquidity sweep, after price sweeping liquidity at key zones, market reversed. But in the case of liquidity run, price doesn't reverse immediately. So the liquidity run is like you giving a gun to a mad person, or a mad person chanced on a gun with live bullet. So as that live, that mad person keeps moving, anybody that he will find on his way, that person will be gunned down. So when the liquidity run is on the rise, all stop loss on its way is cleared. When the liquidity run is on the rise, if price keeps selling in the bearish move, if price keeps selling, all stop loss on its way is cleared. So at this zone, stop losses at this zone cleared. At this point too, stop loss at this zone also is cleared. So if the selling order or the selling move will continue, it means that all stop losses on its way will be cleared. That is why earlier on said that liquidity run is just like a mad person with a gun. Anybody that he will find on his way will be gunned down. Anybody that he will find on his way, that person will be gunned down. So that is a typical example for liquidity run. So with the liquidity run, that one, price doesn't reverse immediately. The new trend will continue to trigger stop losses, orders that it have on its way. So that is how the liquidity run is. So if you've joined me on YouTube or any other social media handle, all I want to tell you is that make sure you subscribe, you like and share. Now let's continue. So another example of what actually influenced my decision for taking this trade is what you've seen on your screen. And this is a liquidity run which was happening on the market, of which made me join this particular trade. So over here, look at what happened after price breaking this structure. So over here we have boss here. Price went up. What happened? We have a fair value gap. We're expecting price that it will reverse after sweeping liquidity, as we saw over here. But in this case, it didn't happen. As price got to the liquidity zone, we have a bull candlestick formed here. Then another bull candlestick confirming that market is about to go up. Then I joined the bullish move. So this is what? A liquidity run. So in this case, all those who have their stop losses at these zones, all cleared. Any stop loss as price keep rising, as this bullish move continue, all stop losses on its way are cleared. So this is how the liquidity run is. The liquidity run is different from that of our liquidity sweep. With the liquidity sweep, merely after the sweep, market reverses. But with the liquidity run, it doesn't end like that. It will continue until that particular trend gets exhausted. So if it is a bullish move, market will continue buying clearing all the stops on its way until it will get to a new high. Until it gets to a new high, then you see market reversing. Until it reaches or targets a new high, then you see that market reversing. In the case of bearish move, it will go down, continue to go down to clear stop losses on its way until it gets exhausted. Then you see market reversing in a bullish move. So that is the liquidity run. That is the liquidity run. Remember, you are with E-marketTubeFX and you are with your trader Henry and Pemdako. Now, over here, let's look at what we have, the opportunity, trading opportunity that come with the liquidity run. Reversal opportunity after the run. So after price aggressively break through old highs or lows, the liquidity run, it often reverses sharply because big players have already collected liquidity. Opportunity: enter trade in the opposite direction when signs of exhaustion or market structure shift appear. Sell after a run above high. Buy after a run above lows. So over here, what are we talking about? Come here, let's see. So when we come to the 4-hour time frame, let me reduce it small, then you see what I'm talking about. Let me remove the bar here. So over here we saw that we had a bearish move that brought price down. So as price was coming down, all liquidity at this zone, at this support, cleared. Liquidity at this zone cleared. Liquidity at this zone also cleared. So that is how the liquidity run is. But as price approach the trend line, you can see that as price got to the trend line, you see that the bearish move got weakened. So at that point, you can also join the new bullish move, which actually happened on the market. So as price got to the trend line, as you can see, we had a confirmation that market is about to reverse, and that is what you see here. So price movement from this low up to this high is profit for you. If you are to come to the 1-hour time frame, you can also see. So after the formation of this bull candle on this trend line, is a confirmation to you that market is about to move up. You can join the bullish move. So that is what it means. You can go to the 30 minutes time frame, then also you can pick a confirmation there. So after formation of this, you can also join the bullish move. So that is how it is. Remember, you are with E-marketTubeFX and you are with your trader Henry and Pemdako. Now let's continue our presentation. So I've explained this point to you. Then fair value gap re-entry. So over here, what are we talking about? Liquidity runs frequently create fair value gaps due to the fast movement and imbalance between buyers and sellers. Opportunity: wait for price to retrace into the fair value gap, then take an entry in the new direction, targeting the other side of the imbalance. So over here, as I already told you, as and when the need arise, we'll come back to the chart. Then I will demonstrate to you those ideas shared over there. So over here we have a fair value gap. Price came down. It created, as price was pushing down further, it created a fair value gap here. So we've identified the fair value gap. As price was approaching or retracing to the fair value gap, we had a confirmation of a bearish candle form here, of which earlier on I showed you how you can take advantage of price movement retracing to the fair value gap and reversing from the mid. So with this the 2-hour time frame, you coming down to the 1-hour time frame is a confirmation. This bearish candlestick form here is a confirmation to you that market is coming down, so you can place your stop loss behind, then you join the bearish move. If you come to the 30 minutes also, it's a confirmation to you as a trader that market is coming down. Then you place your stop loss behind, then you join the bearish move. So this is how you can apply the knowledge when it comes to the liquidity run also, to take advantage of opportunity on the market and make good profit for yourself. Remember, you are with E-marketTubeFX and you are with your trader Henry and Pimdaku. If you're a scalper, you can go to the 1 minute, 5 minutes time frame, then pick a quick signal there. Then you also join the bearish move. I've already demonstrated to you how you can do this, so you can just take advantage. Then you also join or take what you call sweep some money from the market. Now let's continue with the presentation. Now, so over here, that is the market structure shift. So we are on the third point, market structure shift. So once liquidity run complete, there is what? A break of structure, which is boss, often follows. Opportunity. Use this as a confirmation that the market is changing direction, ideal for trend continuation or reversal setup. So as and when there is liquidity sweep, there is always what? A break of structure. There is always a what? A break of structure. So when there is a break of structure, what happened? Or says what? Use this as a confirmation that the market is changing direction, ideal for trend what? Continuation or reversal. So over here, this trade that I took, after price breaking this structure, as I earlier told you, we have a fair value gap here, of which price retraces into the fair value gap. So as price retraces into the fair value gap, it confirmed to me that market is going to continue in the bullish what? The bullish move. So me joining the market, it means that I've aligned myself with the what? The trend which is happening on the market. I've aligned myself with the trend which is happening in the market. There is a shift of structure. There's a break of structure here, which shows that market is going to continue after price reversing from the fair value gap. Market is going to continue in the bullish move. You join. If it is a bearish movement also, you take advantage like what I demonstrated to you from the fair value gap. You continue with the bearish movement which is happening on the chart. You join, you make profit for yourself. So this is how you can take advantage of this knowledge in liquidity run and make money for yourself. As simple as that. As and when price is reversing from the fair value gap, you just continue or join the new trend. Don't trade against it. So me having the knowledge of this fair value gap of which price reversed from means that market is going to continue in the bullish move. Then I joined the new trend. Over here, market was selling. Price push up to break the boss that we have here. Tells us that market is going to continue buying with a confirmation from market reversing from the fair value gap. Me being in the bullish order I'm in profit. So this is how you can also take advantage of this liquidity run, then make money for yourself. So that is it. So the fourth point has to do with institutional order flow alignment. So liquidity run often represents a smart money activity as institutions use the move to fill or exit position opportunity, trade in the direction of the institutional order flow after the run has been established. I've already explained this part. You just have to align yourself. As they continue to sell the market. Just align yourself with the new trend which is happening. You don't sell against the trend. I've already demonstrated this part to you. You don't trade against it. Just align yourself with the new trend. If it is a bull move, align yourself with it. Identify those key zones, the support, those demand zones. If it is a bull, identify those demand zones. Then you join the market. So in the case of that fair value gap, this area tends to be what? The demand zone where price reverse. This fair value gap of which price reverse from is a demand zone. Join the bullish move. You are good to go. If it is a selling move which is coming down, where you identify the fair value gap, that area also tends to be what? A supply zone. You join the selling move which is coming down. If you're a scalper too, you can what? If you're a scalper, you can go to the lower time frame. This is a full package thing that I'm showing you. You can go to the lower time frame and also do same thing there. Identify those supply zones, then you join the selling move which is happening in the higher time frame. Because a scalper, you can't trade in a 1 hour time frame. Yours is the 1 minute, 5 minutes time frame. The same thing is happening there. You join, then make good profit for yourself. You join, then you make good profit for yourself. So remember, you are with E-marketTubeFX and you are with your trader Henry and Pim Dakun. Today we are looking at liquidity sweep and that of what? Liquidity run. So the fifth point has to do with what? Swing trade continuation. So over here, what am I talking about? In trending market, a liquidity run might continue the trend instead of reversing. Opportunity after confirmation of retest of structure or fair value gap fill. Traders can enter trend continuation. So after you've gotten a confirmation where we have a swing trade continuation, like let me use the 4 hour time frame to explain this particular point to you so that you will understand. This is our 4 hour time frame. This is our 4 hour time frame. This is the gold USD chart. So with this, as price reversed after the liquidity sweep, you have a confirmation of what? This bearish candle formed here, which tells you that market is about to come down. Market is about to come down. So what do you do as a trader? If this didn't convince you, what about this candle? This is a 4 hour time frame of which a swing trader you can take advantage of. Then you also join the bearish move that is coming down. You join the bearish move. You don't wait for price. That is what I always tell my students, that if you have edge, if you have a proven system that yields profit from the market, that is the edge. For you to foresee what is about to happen is what is going to make you the profit, and that is the edge. So you don't wait for price to reach this low before you know that market is about to sell. After the liquidity sweep here, we have a confirmation of market coming down. You join the trend. You have the confirmation here. What stops you from joining the market? The bullish move is over. Sellers are dominating on the market at that moment. Just join and make good money for yourself. As and when there are fair value gaps and price is tracing from, you can what? Introduce or scale in your trade. You can scale in your trade. So with this is a 4 hour time frame. I've already explained to you. As price is retracing from this zone, if the 4 hour is too much, 1 hour time frame, as price is retracing from the fair value gap with a confirmation, price movement after the formation of this bearish candle, you've already joined the trade at this zone. And as price is retracing from the fair value gap, you can enter new positions here. So price movement coming to this low is profit for you. So that is what I want you guys to take note from this point. Now let's continue. Key difference between liquidity sweep and that of liquidity run. Liquidity sweeps usually signal a swift price reversal after taking out earlier highs or lows, marking a turning point on the chart. What are we talking about here? So that's what you see here. So as price pushed up, this market makers push price down, hoping that market will continue selling, but it's just a fake out. As price got to this point, they reverse price just to take out the liquidity. There are so many traders who have joined the selling move coming down, and this market makers pushing price down is going to help this retail trader or market participant to make insane profit from the market. They said no, we also want to sell this market, we need more money. Okay, so now do you know what we are going to do? We've initiated this sell. There are so many traders which will be induced to place a sell order with their stop loss here. So joining market coming to this low, they are in profit, they are going to inject more position. Then the reverse market back. So reversing market at this point is a fake out. The intention is to come and trigger all the stop loss here. All those who are in the selling move with their stop loss here, they will come and trigger. Then traders who have their pending buy order at this point, thinking that after price breaking this resistance, market is going to continue buying, their pending buy order executed, market reversed. They've also been taken out of the market. So that is the liquidity sweep. That is the liquidity sweep. Liquidity sweep, all this talk here and there from the beginning of this presentation, the summary is what you are seeing here. The summary of it all is what you are seeing here. Remember, you are with E-marketTubeFX and you are with your trader Henry and Pimdaku. So always it is advisable that you wait for these market makers to sweep liquidity, then you join the new move which is about to happen, so that you don't become a liquidity to the market, but rather you will sweep liquidity from the market. So if I took this trade, this is the reason. Just the knowledge of this concept in ICT is what made me take this trade. I repeat, just the knowledge of this concept in ICT, liquidity sweep, is what made me take this trade. So if you're a trader watching me at this very moment and you also want to know how you can analyze the market, want to trade the market, you can check the description of this video. You see my community, my Telegram, WhatsApp group link there. You can join the community, then we do it together. Yes, just join the community. Let's do it together. Remember, you are with E-marketTubeFX and you are with your trader Henry and Pimdaku. All this that I'm giving to you at this very moment explain the fact that the knowledge of the market is more important than the money that you deposit in your account to trade. The knowledge of the market is more important. If you don't have any knowledge with regard to how this market works, gambling left and right can cause you to blow that 100,000 USD that you have in your account. But if you have knowledge with regard to how this market works, with 1,000 USD that you have in your account, with time, you realize that it is no more 1,000. You may see 500 USD on it, not in a day, but in a long term. So think in a long term as a trader. Don't gamble and think that you can make consistent profit from the market. So liquidity run, liquidity sweep, I've explained to you, and I've also explained the reason why I took this particular trade, just with the knowledge of the liquidity sweep. Now let's look at that of the liquidity run. Liquidity runs suggest that after price crosses previous high or low point, the trend continues with strong momentum in the same direction, extending the move further. Now, what are we talking about here? This is what we are talking about. After what? Price crosses previous high or low, the trend continues with a strong momentum in the same direction, extending the move further. So this is the previous high. This is the high. This is the previous high of which price broke that high, and it didn't end there. Price continue buying. So after this market makers break the structure that we have here, hoping that market will reverse, but didn't. So market continue. So as I earlier mentioned, as price continue buying, all stop loss on its way gone down. All stop losses on its way gone down, right from this point up to this high. All stop loss as it continue buying, all stop loss gone down. So I earlier on explained to you that liquidity run is just like a mad person with a gun with live bullet in it. Anybody that this mad person will find on his way is going to be gunned down. So just use that to understand what the liquidity run is. So liquidity run is different from liquidity sweep. In most cases with liquidity run, the momentum will continue and target a previous swing high. If it's a bullish move, it will target previous swing high, target high level before later price will reverse. If it is a bearish move, it will target previous swing low. Market will go down deep, target previous swing low. So as market going down, all stop losses at the on its way is going to be cleared. It's going to be cleared. But in the case of liquidity sweep, as market sweep liquidity at some key level, immediately market reverse. Market reverse. Remember, you are with E-marketTubeFX and you are with your trader Henry Ampem. So if I took this trade, this is the reason why I took this trade. So you see how you can apply the knowledge of liquidity sweep to make money from the market. And you see how you can apply the knowledge of liquidity run to make money from the market. This is not a joke. The evidence is what you are seeing here. The evidence is what you are seeing here. Because as price moves in that sharp manner, it always creates fair value gaps. And those gaps are not just ordinary gaps that you are supposed to sleep on as a trader. Quickly you identify. So as price reverse from the fair value gap, I knew market is going to continue buying. So me joining the bullish move, all profit for me. All profit for me. Remember, you are with E-marketTubeFX and you are with your trader Henry Ampem. Today, what we looked at is what? Liquidity sweep and that of what? Liquidity run. So I've done my best to explain these two concepts in ICT to you as a newbie watching me at this very moment. If you're also a trader with some level of experience with regard to this Forex industry and you don't understand what liquidity sweep is and what liquidity run is, I've already explained everything to you and also demonstrate to you how you can apply this knowledge in your trade and make profit from the market. E-marketTubeFX is everywhere. E-marketTubeFX is on YouTube, Facebook, Instagram, TikTok, Telegram, and also WhatsApp. We have a Telegram community or group where you can also join, take advantage of the signal and education that goes on over there. You also have a WhatsApp group where you send signal, then the education that goes on also there, you can take advantage. Then all our social media handle do post articles with regard to the knowledge about this market. You can also take advantage and deepen your understanding. If you are thinking of getting someone who can help you to understand this Forex industry, no time to waste. You can DM me, join the community, DM me, then I'll help you also to understand how you can trade this market and make profit out of it. So that is all that I want to share with you today. Liquidity sweep and liquidity run. And I've done my best to explain this concept to you. Long live Forex. Long live E-marketTubeFX. Bye-bye.